Welcome back. You're still tuned into Market Fatafat right here on ET Now, a show where we discuss all the stocks that are buzzing in trade today. So let's get started. And we are now joined by Aditya Agarwala of Invest for Review. Aditya, thank you so much for taking your time out and joining us here on ET Now. An SBI card, that's the stock that I've picked this afternoon. It is buzzing in trade today on the back of some management rejig where Chief Risk Officer Shantanu Srivastava has resigned. And 6th of October 2025 will be his last day. So on the back of this management rejig, the stock in focus today.
All right, the SBI card in focus on the back of a management rejig. But Ashisha, there's another stock that is in focus on the back of a management rejig, and that's Titan, because senior management reshuffle has happened. Arun Narayan, who is likely to take over as the CEO of the jewelry division from 1st of Jan 2026. He's succeeding Ajoy Chawla, who took over as the MD from Coast to become the CEO of watches division from 13th of August 2025, replacing Suparna Mitra. So on the back of that management rejig happening on Titan is also in focus.
Okay, so Titan in focus on the back of management rejig, but IREDA, Rabinder, it reported its numbers. How were they and how is the stock reacting?
Whereas IREDA is in focus, the company has announced the Q1 FY26 number, and the company's interest income saw an uptick of approx 29% on a year-on-year basis. And if we talk about NII, then NII also saw an uptick of 36% on a yearly basis. Now talking about net profit, then net profit saw a decline of 36% at rupees 247 crore as compared to 348 crore, and company's asset quality deteriorates by 168 basis point on a quarterly basis. So back of the week Q1 FY26 earning, IREDA is in focus and the stock is down more than 5%.
All right, that's IREDA in focus, declining away in trade with cuts of 5%. Coming to you, Kanishka, you picked out Avenue Supermarts for us. Tell us what's the news flow here. It is about to give out its earnings today. Tell us what are we penciling in.
That's right. So Avenue Supermarts, like you said, is in focus because it is going to come out with its earnings today. And with earlier updates, they are indicating a mixed performance. Now, revenue, as we saw in the Q1 update, has risen about 16% on a year-on-year basis to 15,932 crore rupees. EBITDA, meanwhile, is expected to rise anywhere around 10%, and PAT, that could rise by just about 7.6%. With margins, they are seen to be dipping to 8.4% from the 8.9% level last year. Now, as per the operational update that we saw earlier, the company has added 9 new stores during the quarter, taking the total count to 442. Analysts are also very closely watching out for the same sales growth trends, commentary on general merchandise and apparel, the impact of e-commerce and quick commerce, and also FY26 store expansion plans. Other than that, high wage costs and weaker sales per square feet remain some of the key concerns for the margin outlook going forward. Now, ahead of its earnings, the stock is trading about 2.7% lower.
Okay, this stock is sitting with cuts of nearly 1.5 to 2% ahead of its earnings, which will be reported later today. But shifting focus from Avenue Supermarts to Tata Power then, and the stock is in focus on the back of a big block deal that happened today morning. In fact, about 1.06 million shares changed hands via block deal. Of course, we don't have the details of buyers and sellers as yet. It should be out anytime in the evening. But for now, on the back of that block deal, Tata Power is in focus, down 0.3% as we speak.
All right, that is Tata Power in focus today. But let's move on to the next counter. Tata Steel also, that is in focus today. Now the company has announced that it has acquired 124 crore equity shares for $125 million from its wholly owned foreign subsidiary T Steel Holdings (PTE). This comes after Tata Steel has acquired a stake worth 10,727 crores in T Steel Holdings in the month of February. And before that, in the August of 2024, the steelmaker had acquired a stake worth 2,348 crores in its Singapore unit. Now, this acquisition is part of the broader plan approved by the board of Tata Steel in May 2025 to infuse up to $2.5 billion into T Steel Holdings during FY25-26. through one or more tranches, and once the transaction is completed, the TSHP will remain a wholly owned subsidiary of Tata Steel. On the back of that, Tata Steel has given up all the morning gains, currently trading at the day's lowest point with cuts of more than 0.5%.
Okay, so the stock is sitting with cuts of nearly 0.6% as we speak. But shifting focus back to the IT sector then, Emphasis. Rabinder, tell us what is the news flow here?
Well, yes, Emphasis is in focus. Emphasis Corporation USA, which is a wholly owned subsidiary of the company, has acquired a 26% preferred stock stake in USA, and the total consideration of up to rupees $4 million. So, back of this, Emphasis is in focus, but stock is down more than 1%.
All right, moving on then to the next counter that is in focus today. This is Maruti Suzuki. Kanishka, you picked out Maruti on the back of a brokerage note. Take us through the details of the note.
That's right. So Maruti Suzuki, as you said, is in the spotlight because of a brokerage note by UBS in which it has downgraded the stock to neutral, citing a weak demand environment, particularly in the small car segment. The brokerage has set a target price of 13,300 and flagged low confidence in Maruti's ability to regain market share as the competition for the second spot in the Indian auto market is heating up. Now, with demand headwinds and rising competition flagged by the UBS, the street is watching out for Maruti shares, which are currently trading nearly 1% lower.
That's the view coming in on Maruti Suzuki, but let's shift focus then. IT sector could see some more pressure in the next few years, says Aditya Agarwala of Sorjo Investment Managers. He also shares his growth expectations in the light of muted earnings that TCS reported. Let's go across and listen into what he had to say.
The miss in the revenue is quite sharp, and the deal wins are okay. Unfortunately, despite BSNL ramp down and no wage hike, the margins increase is also very, very nominal. So I think, there is nothing to cheer about in the whole number. That 5,000 addition also on a base of 6 lakh, I think is a very, very nominal addition. So I would say that, on anticipated lines, as we have maintained our view, this large caps in IT are as 5-6% growth story for long term. Broadly, this has become a 6-7% revenue growth story sector for large caps. Mid cap could be slightly better. Some people are shifting their FMCG investments to IT as a defensive, and that could be only reason why there could be some stocks could hold on a little bit. But otherwise, I think this sector, I don't see the large cap growing at more than 6-7% for next 5-7 years at least. It is very, very tough to grow beyond.
All right, so that's the outlook coming in on IT. But Kanishka, you picked out Bharat Forge for us on the back of a brokerage note again. It's a downgrade coming in. Tell us what are the details of this note?
That's right. So UBS has given a brokerage note on Bharat Forge and it has downgraded the stock from buy to sell, slashing its target price to 1,215 rupees. Now, this downgrade is driven by global macro uncertainty, continued weakness in the company's non-defense segments, and muted commentary from end consumers. Now, UBS's bearish outlook has raised concerns around earnings visibility, keeping the stock under pressure today, trading nearly 1.5% lower.
Okay, so that's Bharat Forge down 1.5% as we speak. But Harsha Upadhyay, CIO Equity Kotak AMC, is positive on defense as he sees the possibility of higher investments within the sector. He also believes that defense will outperform over the medium to long term. Let's go across and listen into his rationale.
So we have been very positive on defense for quite some time now, and we started building our positions when the government started to focus on indigenization, and also larger investments continue to happen into defense, etc. And given the fact that now the geopolitical issues are so significant, and most of the economies, most of the regions are looking to spend more on defense, I think clearly you will continue to see a higher level of investments going into defense, not just in India, but also in other countries. And for Indian defense manufacturers, the opportunity is twofold. One, they can continue to cater to Indian demand, and also at some point of time, you will have export opportunities. So that's something that we have been very, very keenly watching. Everything that is focused on aerospace, electronics, etc., and also explosives, which is going to be needed across the board whenever there is a geopolitical issue and a war, are the segments within defense where we have positions, and continue to believe that over a medium to long term, this is going to continue to outperform. However, in the short term, yes, the valuations are on the higher side, so one needs to have a little bit of caution.
We've recovered a tad bit over the last few minutes, but let's get going with all the stocks that are in focus today. And Aditya, coming to you then, Marico, why have you picked up this one, and where do you see the stock headed from the current level?
Hi, good afternoon, Ashisha. Thanks for having the show. Actually, if you take a look at all the FMCG stocks off late, they have been doing well for themselves, and I believe for next few weeks you will see this momentum continuing in the FMCG space, and within that, I think Marico looks the strongest. Is on the verge of a breakout from a hurdle which is close to about 740 on the upside, happens to be an all-time high as well. Once that breakout takes place, which I am preempting, a breakout will happen anytime soon next week. You will see levels of at least 780 to about 800 on the upside. So one can actually start buying the stock at current levels, add onto the position on breakout above 740 and look for a target of 780 to about 800 on the upside. Plus, if I plot the technical indicators like RSI and MACD, both are confirming the bullishness in the stock and likelihood of a continuation of the uptrend in the coming weeks as well.
All right, moving on then from Marico on the charts. Rabinder, you picked out a brokerage note candidate, Interglobe Aviation. Tell us, what does the brokerage say?
Kotak Institutional Equities has come out with a note on Interglobe Aviation, and they have maintained the buy rating with target price and high target price to rupees 7,000 as compared to earlier target price of rupees 6,700. They say that the Indigo recent moves in capacity planning allocation suggested the pace and ease at which it leveraging the natural travel flows involving India's ability to create value is meaningful, and as Indigo scale up its network overseas, effects of the network planning becoming visible in both international and domestic market. They say that they have increased target multiple to 23 times with 3 times contribution from long haul international, and they have cut FY28 as EPS estimate, which is driven by earlier normalization of tax rate. So back of this note, Interglobe Aviation is in focus and the stock is up 1.5%.
Okay, so Interglobe Aviation up 1.5% on the back of this note. But Aditya, Prestige Estates, that stock is doing absolutely nothing today, but it has risen nearly 5% over the last 5 trading sessions at 1695 currently. Where do you see the stock headed?
Exactly, Ashesha. So since the stock is flat, I think so it's a good idea to go along on the stock. Most of the real estate stocks are doing well. And within that, I think Prestige Estates is one which looks the strongest to me on the chart setup as well. Once it breaks out of this hurdle of 1700, which I believe can happen anytime, either today or next week early, you will see stock heading to levels of 1900 on the upside. So for a target of 1900, one should clearly look at initiating a fresh long position here. On the downside. 1650, 1620 is a good support area. We have witnessed good volume action recently in the up moves. And when the stock has entered into a consolidation phase, volumes are drying up, which is a classical setup as far as technicals are concerned. So all in all, looks very strong. And I think for a target of 1900, one should start buying Prestige Estates from current levels.
That's a buy call coming in from Prestige Estates, but let's also put the spotlight on the insurance sector. Then we had insurance data for the month gone by that came up yesterday, and Motilal Oswal has come out with a report on the back of that. They say that the individual weighted received premium growth for private players improved to 13% on a year-on-year basis in the month gone by, from just 7% that we had seen in the month of May. In terms of individual companies, we have HDFC Life, which reported a growth of 12% YOY. SBI Life grew by about 14% over the corresponding period. ICICI Prudential's growth, meanwhile, declined by about 10% on a year-on-year basis. So on the back of this insurance data and Motilal Oswal report that has come out this morning, we have the entire sector which is buzzing in trade today.
All right, that's insurance stocks that are in focus today on the back of that. But Aditya, let me come to you for PFC. Now, yesterday a PFC and REC, good, bullish brokerage note that had come out that had given an upgrade to these two counters. But on the charts, what do you see for PFC?
Ankita, we've witnessed the stock go into a consolidation phase from last several months. In fact, from the start of this year, these stocks have done nothing for themselves, very narrow consolidation phase. And once this consolidation phase is over now, it looks like a good volume action is happening on the buy side. And it's broken out from that sideways consolidation phase as well, trading above the 200 DMA. So things look good and upbeat for these companies, PFC and REC. And within the pack, I prefer a PFC at current levels because it has already broken up from that consolidation pattern. On the upside, I think stock can test levels of 480 to 500 easily in the near term. And RSI and MACD both are pointing towards bullishness, as both have entered into the bull territory. And for past 2 trading sessions, we're witnessing good volume action as well in the PFC on the breakout. So all in all, looks very good. Buy for a target of 480, 500 on the upside. Place a stop loss somewhere around 420 on the downside.
Okay, so that's PFC for you and the technical chart check that we got for you. But Kanishka, all of these telecom counters in focus today, Bharti Airtel, Vodafone Idea. Tell us, what's the news piece?
That's right. So both Bharti Airtel and Vodafone Idea, they are under pressure today after UBS issued a very cautious outlook on the sector, citing valuation concerns and tariff uncertainty there. Now, Bharti Airtel has been downgraded to sell with a target price of 1970 rupees, whereas Vodafone Idea, that has been cut to neutral with a target price of 8.5 rupees. Now, UBS knows that while 10 to 12% of tariff hike is modeled for late FY26, there is the risk of delay, especially as Indian mobile tariffs are now in line or higher than other emerging markets at the lower end. Now, with limited room for price hikes and also high valuations, the near-term outlook remains cautious for the telecom space. That's the word coming from UBS, and hence both Bharti Airtel and Vodafone Idea continue to trade with cuts.
All right, moving on from the telecom sector. On the back of that, UBS downgrade coming in. Coming to you, Aditya, you've picked out RBL Bank for us. Tell us, what do you see on the charts for RBL Bank? That counter is actually up more than 2% today. In fact, it is given some really good returns in the last 6 months of almost 75%. Do you see more up move coming in?
Oh, absolutely, Ankita. And spot on. Stock has given approximately 65% year to date so far and looks very strong within that small bank space that we are closely watching. And a lot of these banks are doing well for themselves, the CUB, RBL Bank. And RBL Bank definitely things looks very strong, and I think there's room on the upside still left here for a target of 300 to 350. One can still look to buy the stock even at current levels. It's more of a positional trade, Ankita. I'm not looking for a trading perspective in RBL Bank, because my sense is going ahead you will see a big up move in RBL Bank. So for a target of 300, at least one should look at buying the stock at current levels, and maybe on the downside good support area around 245 to about 250. And look at the way all these indicators are pointing towards the bullishness. All suggest that stock is poised higher in the coming trading sessions.
Alright, so that's RBL Bank for you on the charts. But Rabinder, Kanishka, Aditya, thank you so much for taking your time out and joining us here on ET Now and discussing all the stocks that are buzzing in trade today. But that's all the time we have on this edition of Market Fatafat. Closing trades will take you through the last hour of trade. Stay tuned.